Hello traders, and welcome back to another video. This is RALLYTOP Investing. Now let me first off appreciate all you guys out there for your support and encouragement, but more importantly, let me say this, that I will so much appreciate if you can be more involved in our videos by way of making comments and asking questions. That way we'll be confident that you are following along with us. The purpose of this channel, the original purpose of this channel, was to impart knowledge to you guys out there to become a better trader by improving your trading skills. And we are desirous to see that happen, and that can only happen if you ask questions for us to know exactly what we can present to you. Again, you need to always be making us know the type of content that you want to see next. Okay, all right, with that being said, let's jump right into our discussion today. In today's video, we want to explore the topic of weak highs and strong lows, or strong highs and weak lows in determining a high probability trade setup. All right, now the valid question you may want to ask is, what are weak highs and strong lows, or strong highs and weak lows? Perfect. Now I'll try my best to explain. Weak highs are swing highs that are expected to be raided by price, while strong lows are swing lows that are protected, that price cannot break through. We don't expect price to break through. Conversely, strong highs are swing highs that are protected and we do not expect price to break through, and weak lows are swing lows that we expect price to raid. As simple as that, guys. It could sound a mouthful, right? But I'll do my best to explain to you. Now take a look at this diagram here. To my left, this is weak highs and strong lows. All right, what we essentially mean is that this is a bullish structure, as you can see. Now price was bearish, was coming from up here, printed this low and printed this high, and then came down to break this low. As you can see, this low was violated. All right, this very low was violated. Can you see that, guys? And now immediately after price violated that low, price now rallied back up, all right, to break this structure high here. Can you see this structure was broken here, this structure high? All right, this structure high was broken. Now we are saying that you need to understand your weak highs and your strong lows. The reason being that if you can be able to identify weak highs and strong lows, or strong highs and weak lows in the market, then you'll be flowing with the institutional order flow, and that will greatly improve your trading. Do you understand that, guys? Now, weak highs are highs that we expect price to raid or violate. All right, now as you can see, like I was explaining, price went up and took out this high here. Now this high here, remember, price was coming down, so this high was previously a strong high. All right, but when price now broke this structure downward and then went back straight back up and violated that high, that previous strong high now became a weak high. Why is it? Because price has raided through it and closed above it, and so we can safely say, or we can safely label this point now as a weak high. Can you see that, guys? You can simply say this is a weak high now. You can label it as a weak high, and then price continue to break the highs. So we are expecting price in a bullish run to violate the highs, which make the highs weak highs, because price can simply violate it or violate them. Do you understand that, guys? But the lows are protected, and so these lows that are protected, that price cannot violate or break through them, are known as strong lows in the market. All right, this will altogether give you your institutional order flow. All right, and then take a look at this portion now. Price went up, violated this high. This high here, this high is supposed to be a weak high if price violated it to the upside. That's why I didn't label it. This low here was supposed to be a strong low, because we didn't expect price to come to break through it and close below it. All right, but look at what price did. Price came back straight down and broke and closed below this low that was supposed to be a strong low. Immediately that happens, that means that this low has become a weak low. So we can now label it to mean that it is a weak low. This low here now becomes a weak low. Can you see that, guys? Now price retraced, went back up, but failed to take out this high, which could have, if it took out this high, it would have made this high to maintain its prior position as a weak high. But price didn't do that. Price couldn't go to break this high. Rather, price went straight down again to break the structure here, the structure low here, the second time, therefore causing this high to become a strong high. So we can now label it as a strong high, guys. So this is now your strong high, and then this too is a strong high. Why? Because these highs are protected. They are not expected to be violated. All right, now because price has broken this low here to the downside and broken it again to the downside, so what are we expecting? We are expecting the lows to be violated, which will now cause these lows, all right, to become weak lows. That's essentially what it means by weak highs and strong lows. Now the same thing here. All right, price was coming from below here and now printed this low, all right, and went back up to take out this high. This is supposed to be a strong low. All right, this is supposed to be a weak high. That's why I didn't label them. Now, but immediately after this high, price went straight down, came straight down to break and close below this previous low, this low here that was supposed to be a strong low. All right, price broke through it, making it now become a weak low. So we can label it now as a weak low. All right, and label it as a weak low. Can you see that? Now price now retraced. Remember, this high supposed to still be a weak high, because we are expecting price to go and raid it to make it a weak high. All right, but look at what price did, just like as I explained here. Now price instead now came down heavily to break and close below this low here, all right, causing this high to become a strong high because price couldn't break through it again. So this now becomes a strong high. Can you see that, guys? This now becomes a strong high. All right, now because price has broken this low here to the downside and broken it here again to the downside, so we are expecting the lows in a downtrend to be violated, which will cause the lows in a downtrend to become weak lows, and the highs will become strong highs because they are protected. Can you see that, guys? The same scenario happened here. All right, so without wasting time, now this is what it means to be strong highs and weak lows, and weak highs and strong lows. Do you understand that, guys? Simple as that. We need to understand that one. All right, but now beyond understanding your weak highs and strong lows, or strong highs and weak lows, now How do you take advantage of this information, this data here? How do you take advantage to take or get high probability trades? I'm going to explain to you. This will take us to our next diagram. Let me show you now. This is all right. Without saying much, you know this is the structure of weak highs and strong lows, right? Now, I have told you severally that when price breaks structure, can you see this structure break here? When price breaks structure, all right, once it breaks structure, it will leave behind an OB, all right? So this is, let's assume this is an OB, all right? It will leave behind this OB here, all right? To leave behind an OB. Now, I've told you that once price breaks structure, your most current structure or most current swing high and swing low is your trading range. After the break of structure anyway, it's your trading range. It's your playing field, isn't it? This is the way to use this, your weak highs and swing lows, to get high probability trades. Follow me step by step. The reason why I'm doing this video now is because of the comments, the many comments I received regarding our last video on top-down analysis. All right, our last video. Now, many people have said they still do not understand how to scale down from the higher time frame to the lower time frame. All right, and thus I felt compelled to do this video to clear up some gray areas. All right, so this is your trading range, your swing high and your swing low is your trading range. Now, I told you that you grab your fib tool. This is your fib tool now. Measure it, place it below here because we are in a bullish run. So you drag it to the high. All right, that's your trading range. All right, that's your trading range. And I told you that this is the 50% of this your trading range. All right, this light blue box above is your premium zone. This light red box below is your discount zone. You want to buy from discount and you want to sell from premium. All right, now once you have identified your trading range and you have gotten your 50% fib level, you wait for price to break down through this your 50% fib level because you want to buy. So you want to wait for price to come down. All right, as soon as price enters into your premium zone, into your discount zone in the case of an uptrend, and remember this thing that I'm explaining to you now using this bullish structure is exactly the same thing for a bearish structure. If you flip this, I'm not going to do that now because we want to save time. If you flip this, all right, the opposite way, you will have exactly the same thing I'm explaining to you now. Do you understand that, guys? Now, as soon as this price now comes into this your discount zone, all right, as soon as price comes into your discount zone or touches on this your, if you want to wait for it to touch on your higher time frame POI, let's assume that this is your H4 or D1, all right, as your higher time frame. Take note, let's assume this is H4 or D1, all right, that's your higher time frame. All right, now as soon as price enters into this your discount zone or touches this your higher time frame point of interest, all right, okay, let's assume that it touches this higher time frame point of interest. Let's make it to touch. Let's assume it touches this higher time frame point of interest. All right, I'm going to tell you what you will do next. Remember, this is your H4, D1 or weekly time frame as your higher time frame, whichever one you want to choose. This is your higher time frame. Now price has come into your discount zone and touch and tap on your H4 or D1 OB point of interest here. right? So what do you do next? You go to your lower time frame. You want to see exactly what you saw on your higher time frame. All right, now let me show it to you. All right, let me show it to you. Now price started coming down. All right, I will show it to you now. Now remember, this your OB here, this 4-hour OB, this is it here. This is it here. This is your 4-hour OB. This is it. All right, that's your 4-hour OB, guys. Is that so? Now remember, let's reduce it a bit. Now remember, this your fib tool is there. Your fib tool is there. Remember, this is your fib tool. All right, so this is your M15, M5 or M1. This is your lower time frame. This is your higher time frame. This is your lower time frame. On your higher time frame, price has tapped into this your higher time frame point of interest, isn't it? Now on your lower time frame, this is what you will be seeing: lower lows, lower high, lower lows, lower high, to come into this your higher time frame point of interest. All right, now as soon as price, remember, you are reading the structure, you are reading your weak highs and strong lows, or your strong highs and weak lows. In this case, you are seeing that when price is coming back to this your higher time frame point of interest, is creating weak highs, strong highs and weak lows, strong highs, weak lows, strong highs, weak lows, strong highs, weak lows. It has come into this your 4-hour POI. What do you want to see from here? This is what you want to see, guys. The same thing that you saw here on your higher time frame is what you want to see here. Now look, take a look. Let me show it to you now. Let me show it to you now. You want to see price do something like this. All right, take liquidity. You want to see price capture liquidity there in front of your higher time frame OB or inside your higher time frame OB. All right, you want to see liquidity capture, and then you want to see price go up to break this previous strong high. All right, this previous strong high, and then you can take your trade when price comes back to your M15 OB. Or if you are, let me finish doing this thing here. Now, sorry guys, very sorry. Now, this is exactly what you want to see on your lower time frame. This is what you want to see on your lower time frame. All right, sorry, let me take this up. So this is what you want to see on your lower time frame. As soon as price taps into your higher time frame POI or into this your discount zone, you want to scale down to your either M15, M5, M1, whichever one, or H1 as your lower time frame. I've told you this is your lower time frame. Now this is what you want to see on that lower time frame. You want to see price take liquidity either in front of your higher time frame POI or inside of your higher time frame POI, and then immediately after it grabs liquidity, you want to see price move up to break structure. That is to show you that market is shifting order flow. All right, so in line, that is shifting order flow in line with this your higher time frame structure, which is bullish. All right, so if you're an aggressive trader, as price breaks this structure once and comes back, there is an OB here, you can take your trade from there if you're aggressive. Now, but if you're a conservative trader, you want to wait for a confirmation of the order flow, the change of order flow, which is double break of structure. All right, and so when price is coming back, you can take your trade from the OB around this place to take price higher in line with your higher time frame bullish structure. Can you see that? Simple as that. You don't need to overcomplicate things. Okay, let me quickly show you what I mean now on the chart. I don't intend to make this video too long now. It's even getting too long. Let me show you what I mean. All right, let me show you what I mean. All right, pam 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 pam. Okay, I want you to take a look at this. Take a look at this. Take a look at this. All right, let me see. I want us to look for a solid example that I can show to you, for you to understand what I'm trying to tell you. All right, I want you to see a solid example. All right, guys, we are here now. All right, now as you can see, price went up here, all right, and came down, then went up again to form this high. Can you see this high here before crashing down? When it crashed down, it broke this internal structure here, this minor structure. It broke it. All right, can you see that? It broke this where's my cursor? It broke this structure here. All right, can you see that break? Can you see that break of structure there? Now, the source of this movement down is this, from this high here. All right, so grab your fib 2 and place it, because you want to sell, you place it from the top of that, the high, and drag it down to this low here. Can you see that? Drag it down to this low. All right, that's your fib 2, and here you have your 50%. Now can you see this? Let's cut price. Let's start from here so that you can understand what I mean. All right, so you can see now, here is your fib 2. This is your 50% fib level. Anything above this light red box is your premium zone, and anything below this light blue box is your discount zone. You want to buy, you want to sell from premium and buy from discount. In this case, you want to sell, so you are looking for a premium price to sell from. All right, now remember, this is your D1, this is your daily time frame. Immediately you see price has crossed this 50% fib level, what do? You scale down to the 1 hour. All right, scale down to the 1 hour, or if you like, there are two ways you can enter the market. You can either draw out your daily time frame OB here, all right, and wait for price to go and touch it, to tap it before you scale down. But again, the second way is for you to wait for price to cross this your 50% fib level to the premium zone. Immediately after that, you scale down. In this case, let me scale down to 1 hour first. Let me scale down to 1 hour. Follow me step by step, guys, because I'm doing this video to clear up the doubts. All right, let's zoom out. All right, now we are here. Okay, I want you to see everything clearly. I want you to see everything clearly. All right, let me take this one out first. I want you to see everything clearly. So I'm zooming out because I want you to see it. I'm zooming in for you to see it. All right, so this is our range. This is our trading range from here, this high, to the low of this your fib 2. All right, and now take a look, because you want to sell. What you want to do with your 1 hour is to find your BOS, find your break of structure, and as you can see, price broke structure here, all right, to the downside, and continue moving down. All right, it didn't mitigate this order block here. Remember that this is an unmitigated order block, so you should expect price to come back to this level. This other block here, if you said it broke structure here to the downside, here, take a look. All right, remember this OB here has been mitigated already with this high here, right? Has been mitigated. This is the unmitigated OB. So price break structure on the 1 hour. That's all you want to do with your 1 hour. All right, immediately after you mark your break of structure, you scale down to the 15 minutes. Scale down to the 15 minutes. Scale down to the 15 minutes. Now let me let you see our 15 minutes. All right, now these are 15 minutes. I want you to see it clearly. All right, so this is our 15 minutes. I want to make sure you see this thing very well. So I'm trying to show you something. All right, so that you don't say you didn't see it. All right, boom, 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 boom. Now as you can see, this is that break of structure on 1 hour, isn't it? Now this is the last bullish candle before this break of structure, isn't it? So you mark that out as your OB. This is how to go from higher time frame to a lower time frame, step by step. It can't be simpler than this, guys. It cannot be simpler than this. That's your OB. That's your OB, isn't it? Your 15 minutes OB. All right, now let's drag that OB out, or let's go to the H1 to make it faster. Let's go to H1 and make it faster, guys. Yes, let's do it faster here so that we don't waste time. But remember, that is your M15 OB. Remember that? That's your M15 OB. So we are still dragging out. I want to be very transparent for you to see everything. All right, all right, all right. Patience is key in this business. All right, so we can now go to that 15 minutes for you to see what exactly all right, so you can see this is that 15 minutes OB, isn't it? So we are expecting price now to come up into this OB and push down and drop. All right, that's what we are expecting. And if price goes your way, you can see the 15 minutes OB would have given you a high risk to reward. All right, we'll give you a high risk to reward. Can you see that, guys? Now this is our OB. Let's frame that out. I want us to use the 1 hour to frame that thing, so because I don't want us to waste time. So we want to frame that. We want to sell this market from that point. All right, we want to sell the market from this point. All right, so we want to sell this market from here. Please take note of what we are doing. All right, so where are we going to target? Well, let's get to that 1 hour, like I said, so that, let's get to the 1 hour so that we'll be able to know what we want to do. All right, so we want to target this low. Remember, this is our low here. Now we want to target the low. We want to target this low here. That's our target, guys. All right, that's our target. We want to target that low. So let's play out price and see how it goes. All right, let's play out price and see how it goes, whether it will go in our favor or not. Now watch it. Watch price now. It has tapped into our OB, our 15 minutes OB. It has tapped into it. Let's see whether it will violate our OB or go in our direction. Went back to the OB to tap into it, but it didn't break through it. It's gone back to the OB. Patience is key. Now let me say something here, guys, before we continue. I want to tell you that once you have done your analysis, you need to learn how to trust your strategy. You need to learn how to trust your strategy, because sometimes the smart money will want to dribble you out of the market. Take a look at how many times price has gone to our OB to hit it, yet it didn't break through our OB. All right, allow price to do its thing. Immediately you have done your analysis and you have entered the market, allow price to do its thing. So let's continue. Can you see that? Can you see? Price melted down completely. Can you see? But we are waiting for it to, right. Can you see that, guys? Can you see that? It has smashed our take profit and price still continue to go down. Can you see that, guys? This is a very simple process of trading your higher time frame from your lower time frame. All right, it can't be simpler than this, guys. I can't make it any simpler. All right, I can't make it can be simpler than this. All right, this is the simplest way for you to trade your higher time frame from your lower time frame. All right, guys, I hope you have learned something from this video. And one more thing before we go: if you are new here, please consider subscribing and hit the notification bell so that anytime we post a new video like this, you'll be notified about it. And if you enjoyed this content, please give us a like, comment and share with your friends and families. And don't forget, if you have not joined our free Telegram group, please consider doing that right away. I will put the link in the description. Please join immediately, because we have lots and lots of valuable content in there that you can help you to improve your trading. All right, guys, I see you next time. Have a wonderful day.